Hello everyone and welcome to today's Explainer. If you own or are thinking about buying rental property in the Kansas City area, you already know something crucial. Every single dollar of rental income you collect starts with one specific decision. A decision made way before a tenant ever signs a lease. And that is whether to approve their application in the first place. So let's just dive right in. We're going to explore how data-driven tenant screening absolutely protects your monthly cash flow, keeps your property in great condition, and honestly, saves you a ton of valuable time.
Here is a quick roadmap for this explainer. First, we will cover the true cost of screening, followed by neighborhood-tuned benchmarks, defeating application fraud, why history beats credit, navigating the tenant screening laws, and finally, protecting your rental income.
All right, Section 1, the true cost of screening.
Now, just a quick heads up before we get deep into the data, this explainer is strictly for educational purposes. It does not constitute legal or tax advice. The legal landscape for landlords can change pretty fast, so always consult your own legal professionals about your specific properties. Okay, with that out of the way, let's get into it.
I want you to take a look at this massive 98% figure. That is the actual rent collection rate Alpine Property Management Kansas City maintains across their 250-plus managed stores. Think about that for a second. Keeping a 98% collection rate across a portfolio that size is definitely not luck. It is the compounding result of saying no to the wrong applicant and yes to the right one consistently, over and over again.
To really grasp why this upfront screening is so vital, you just have to look at the alternative. An unqualified tenant brings late payments, constant maintenance nightmares, and messy disputes. The actual costs of a Kansas City eviction can easily skyrocket into the thousands once you tally up the lost rent, the legal filing fees, and the turnover expenses. When you compare that heavy financial blow to the very small cost of a thorough review up front, the return on investment is just incredibly obvious.
Moving right along to Section 2, Neighborhood-Tuned Income Benchmarks.
If you look online, most screening advice is just a generic checklist, but a generic standard completely fails in a diverse market like Kansas City. The true foundation of income screening is what we call the 3 times rule. This is a baseline standard requiring verified gross monthly household income to equal at least 3 times the monthly rent. So why 3 times? Well, that ratio gives a tenant enough of a financial cushion to absorb an unexpected car repair, maybe a sudden medical bill, or a short gap in working hours without missing their rent payment.
But here is where it gets really interesting. Notice how the local data actually breaks down. Kansas City is absolutely not a uniform market. Rent expectations and realistic income levels in Waldo look entirely different from Brookside, and Brookside looks different from the Northland. For example, in Waldo, typical monthly rents sit around $1,200 to $1,600, meaning that minimum verified income needs to be between $3,600 and $4,800. But jump over to Brookside where rents are higher, usually $1,400 to $2,000, and suddenly your minimum income floor jumps to between $4,200 and $6,000. In the Northland, rents are generally $1,300 to $1,800, requiring $3,900 to $5,400 in income. Applying one flat income number across the entire metro is just a huge mistake. That is exactly how landlords either overqualify a really solid Brookside applicant or underqualify a great Northland one. Alpine prevents this by tuning the benchmark directly to the specific neighborhood.
That brings us to Section 3, Defeating Rental Application Fraud.
In today's digital age, just glancing at a printed pay stub is nowhere near enough to protect your investment. Get this, the National Multifamily Housing Council reports that over 70% of housing providers have seen a spike in fraudulent applications. Over 70%. And here is a pretty wild fact. Literally anyone can go online and buy a highly convincing fake pay stub for less than $20. Fabricated bank statements are just a routine part of the applicant pool these days, and Kansas City is certainly not exempt from this trend. A document by itself proves absolutely nothing anymore.
So how does Alpine defend against this? With a very strict sequence of cross-verification. First, they confirm employment directly through a listed main line for the business, not just some random cell phone number handed over by the applicant. Next, they take the pay stub figures and match them up against actual bank deposit history. Then, they request consecutive documents. This means the dates and the formatting have to line up perfectly across multiple months. Finally, they systematically flag any suspiciously round numbers or mismatched fonts. It is basically a forensic review.
All right, Section 4, Why History Beats Credit.
This is going to be a major paradigm shift for a lot of investors. Think about it this way. A credit score tells you how someone manages their debt.
But a background and rental history check tells you how they manage a tenancy, and those are two totally different behaviors. Alpine heavily weights verified rental behavior, eviction records, and income stability way above a raw credit number. Because let's be honest, a strong credit score paired with 2 prior evictions is a much worse bet than a modest credit score paired with 5 years of perfectly on-time rent. Now, they still pull and read credit reports, of course. They're looking for red flags like unpaid utility accounts or recent judgments. But the actual behavioral history of renting is the true predictor of future success.
Which leads us to a really important question for you as an investor. When you actually get a previous landlord on the phone, what do you ask them? What questions truly reveal a tenant's behavioral patterns?
You have to be precise. Alpine asks these exact 4 things. Did they pay on time? Did they give proper notice before leaving? Would you rent to them again? And was their security deposit returned? Honest answers to these 4 simple questions predict future performance better than almost any other metric out there, and they protect owners from so many costly disputes down the road.
Next up is Section 5, Navigating Tenant Screening Laws.
The legal landscape dictating how you can handle screening decisions is incredibly complex and constantly shifting. Let's walk through some recent legal changes just to show you what I mean. Back in 2024, Kansas City passed Ordinance 230199. This ordinance restricted how landlords could use credit scores, criminal history, and eviction records when making screening decisions. However, the state of Missouri responded to this. Missouri House Bill 595 was signed into law on July 14, 2025, and it took effect on August 28, 2025. This new state law actually prohibits Missouri cities from enforcing ordinances that limit how landlords use those specific screening metrics. So, practically speaking, the state law preempts the Kansas City Ordinance. Now, we are simply reporting the facts of these changing laws here, not taking any stance on them, but as an investor, you absolutely must note that Missouri laws like House Bill 595 do not apply across the state line in Kansas. If your property is in Kansas City, Kansas, you are operating under a completely different set of state laws than you would be in Kansas City, Missouri. It is a lot to keep track of.
Furthermore, regardless of any local or state changes, every single screening process has to strictly comply with the Federal Fair Housing Act. This act protects 7 distinct classes. Those are race, color, religion, national origin, sex, familial status, and disability. Plus, proper adverse action notices must be provided under the Fair Credit Reporting Act anytime an application is declined based on a consumer report. Having a consistent, highly defensible screening process is just absolutely vital to staying compliant and out of trouble.
Finally, we have reached Section 6, Protecting Your Rental Income. Let's summarize how all these distinct steps merge into one unified defense for your cash flow.
At the end of the day, a screening process is only as good as the real-world results it produces. Just look at Alpine's results across their very diverse portfolio. They boast a 98% rent collection rate, 96% occupancy, and a remarkably low 14-day average vacancy period. And they have been proudly serving Kansas City investors since 2013. That high collection rate comes directly from placing tenants who can actually afford the rent based on those neighborhood benchmarks. And the high occupancy comes from placing tenants with verified, excellent rental histories.
I want to leave you with this fantastic core philosophy from Alpine's founder, Marcus Painter. He says, income tells you whether a tenant could pay. History tells you whether they will. That is such a powerful insight. When those two signals disagree, you always have to trust the history. That is the big, memorable takeaway for anyone evaluating a potential renter today.
So, ask yourself, are you truly screening your tenants right now, or are you just crossing your fingers and hoping for the best? If you want to eliminate all that guesswork and seriously protect your investment, you need a local expert in your corner. For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.